Did you know the IRS accepts an average of 13.5 cents on the dollar to settle past due tax bills? Settlement means past due taxes, penalties, and interest adjusted to a lower amount, and when the payoff amount is satisfied, the slate is wiped clean and the taxpayer gets a fresh start. A brand new beginning with no tax problems. And they've just broadened the details so more taxpayers will have the opportunity to benefit from their settlement process. IRS Commissioner Doug Shulman said this fresh start will assist some taxpayers who have faced the most financial hardship in recent years. The IRS has expanded its settlement program, called an offer in compromise, in the last couple of years to help a larger group of struggling taxpayers owing past due taxes. The IRS recognizes that many taxpayers are struggling to pay their bills, so they've put in place common sense changes to their settlement program that more closely reflect real-world situations. These changes have given the IRS more flexibility when analyzing the financial circumstances of taxpayers with tax debt. IRS Commissioner Doug Shulman has said these steps are good for people facing tough times and they reflect a responsible approach for the tax system. Settling unpaid debt is a long-established and accepted business practice when dealing with banks, credit card companies, auto loans, and home mortgages, and the IRS seems to be embracing the concept in all respects. An offer in compromise is an agreement between a taxpayer and the IRS that settles the taxpayer's past due taxes for less than the full amount owed. When considering a settlement, the IRS will initially look at a taxpayer's income and assets to make a decision about the taxpayer's ability to pay their tax debt. Things like ability to pay, income, expenses, and asset equity are considered. IRS Commissioner Doug Shulman recently said, "We have an obligation to work with taxpayers who are struggling to make ends meet." And he said further, this new approach makes sense for taxpayers and for the nation's tax system, and it's part of a wider effort we have underway to help struggling taxpayers. The IRS will generally accept a settlement offer when the total dollar amount being agreed to represents the most the IRS could expect to collect within the reasonable future, usually the next 1 to 5 years, depending on the nature of the tax debt and the structure of the settlement agreement. However, many people, taxpayers and tax professionals alike, stop with a financial analysis due to a mistaken belief that the IRS will not accept a settlement if it's believed the taxpayer has enough assets and/or income to pay the past due taxes in full, either as a lump sum or through a payment plan. It's unfortunate, but this incorrect and incomplete view of the settlement program has frustrated many taxpayers in the past that would have benefited from a reduction in their outstanding tax debt. In addition to a taxpayer's financial situation, the IRS will also consider such factors as the taxpayer's age and employment status, the number, age, and health of the taxpayer's dependents, the cost of living in the area the taxpayer resides, and any extraordinary circumstances such as special education expenses, a medical catastrophe, natural disaster, a retiree needing retirement funds to help meet basic living expenses, or even a young person needing to pay off student loan debt, among other things. Even if a taxpayer has enough assets and/or income to pay the IRS in full, a settlement agreement may still be reached. This means that a taxpayer providing care for a dependent child or loved one with a long-term illness or disability, a retired taxpayer needing his or her IRA, 401k, pension, or other financial accounts to cover living expenses for the remainder of their life, a taxpayer that is recovering from a long-term illness, or a taxpayer that is disabled, may all be able to reach a settlement with the IRS for less than they owe, even if they have enough assets and/or income to pay their back taxes in full. Extraordinary circumstances the IRS considers are not limited to taxpayers in those situations just mentioned, but also extend to situations in which it would be unjust, unfair, or discriminatory to require full payment. The door as to which taxpayers are eligible to make a settlement with the IRS is now wide open. If the IRS has ever accepted a settlement with the taxpayer in the past having circumstances similar to a taxpayer seeking a settlement now, and yes, prior settlements with the IRS can be examined, it would be unfair and discriminatory to reach a settlement in one case but not reach a settlement in a substantially similar case. Finally, IRS Commissioner Shulman said these steps are in the best interest of both taxpayers and the tax system. People will have a better chance to stay current on their taxes and keep their financial house in order. We all benefit if that happens. Thanks for watching our video. If you're unsure about your situation or would like a professional opinion as to your options, you can feel free to visit the Lazat Law Group at irs-settlement.getllg.com. There you're going to find some tabs for a free consultation and/or evaluation of your situation. You'll also find a tab there where you can get a free special report that includes more details about the IRS settlement program and the settlement process. Now, the free consultation and evaluation are offered at no risk and no obligation, and everything that is discussed will be held confidential. This will be a phone consultation, so you can be located anywhere in the United States.